Hi there, Serial Trader here. Let's have a look at Bitcoin as there's been a pretty significant change from the last video. Okay, now I was working that we had this hard bottom in place here, which was around 7,300, and that we had our initial impulse wave up, and that we are working a smaller degree wave 2 down, and up until the last few days here, that was still looking quite viable. Even yesterday, it was still technically intact because you can do up to 100% retracement of wave 1 for a wave 2. You just can't break it. Well, today we've decisively broken it. So this is no longer a WXY for the end of the larger degree wave 2, and this is no longer a wave 1 up, 2 down of the larger 3 that's still expected. So does this really change the overall big picture, expectations of significantly higher prices? No, it doesn't, but it certainly changes perhaps the timing of it, and also perhaps the depth of the correction may still actually extend downwards here. So let me get to what I think is probably the most viable interpretation at this point. So as complex as a WXY double 3 pattern is, you can still go even more complex and do a triple 3, and that's where you have 3 different corrective patterns joined by 2 different X waves that interrupt them. And here you have an X wave, and here I propose that that's also an X wave at this point, after being forced to adapt that view by breaking these lows. So if this is the interpretation, which going through all the different patterns and combinations in the wave principle, this one really is the only one that seems to make sense to me at the moment. So under this interpretation, we got a WXY XZ, okay? And that would be for that larger wave 2. Now this was a very tricky X wave here, and that's also a characteristic that X waves can certainly have. They can basically display the characteristics, of a new trendy move up, which certainly fits well with the expectations at the time, only then to kind of pull the rug out from you in a final sequence down. Now I did have a stop there on my trading position at 7,500, and that has been stopped out. I still maintain the core position because my conviction in the overall uptrend is certainly still there, but as far as having that size on for a trading position, you have to define your risk for that. So I have been stopped out at 75. I'm certainly watching to get back in here, although I don't see anything compelling yet to bring me back in. And let's just go through this for a bit. And what was I going to say there? Okay, so we have decisively broken the 61.8% retracement after we basically had a nice reaction off of it previously there in October. So we basically spiked down through it. Looks like we're basically sitting right around it now. And this could, we could have a bottom here. And let's see that level. So on Bitfinex it's 68.19. It's plus or minus $100 per Bitcoin depending on what exchange you're looking at. But let's call it around 6,800. And the previous extreme here in this corrective formation, this cluster of price, this wave 4 triangulation that we had back here, that low came into play there at, let's see, 6,999, so basically 7,000. So we basically spiked down through that low and also the 618. Had a little bit of a reaction off of there. If you see, I go to the hourly chart. A little bit of a bounce, but certainly nothing here convincing yet that would argue for a strong buy or a fresh buy-in. Not yet. I mean, if you saw something a little more compelling, nice clean 5 up, if you got that, right? And then if you got a nice clear 3 down into a fib zone, that would be a potential fresh long entry setup, obviously with the defined stop of the previous low. But we don't have that yet. we have so far what looks like a fairly weak bounce. That can change, but as it stands right now, it's not overly strong. So I just thought I'd point that out as to why I haven't immediately bought back in with the extra size at least. Again, always maintaining some BTC exposure, but the question is how much size to have on. How convicted are you? And right now the conviction level is lower. Now, I'll propose that, okay, you potentially have that last leg in place to end this overall wave 2 sequence. Possible. But it's also possible you do something like this and say that this is just the A down of the Z. You get a bounce up in B, and then a final move down in a C. Okay? And let me just drop the degree down on that. Get rid of the line here. So this is still possible as well. And that perhaps would put some pressure on that 786 retracement, which is the, let's call it right around 5,500, slightly below that here, but around the mid 5,000s would be the 786 retracement of the overall move up from the December low to the June high. Now, I'm not saying it's getting there, but we've already broken the 618, so that is the next fib zone if we get there. I think it'll be fairly telling how the bounce looks here. If we get more of a bounce here, how it develops, what kind of pattern it takes, whether it's an impulse wave or a more corrective looking wave. We just don't have that data to analyze yet. But another thing I've pointed out here, okay, so before I mentioned we had that nice reaction, not only off that 618 price retracement back in October, we also had that to the day 618 time relationship between the impulse wave up and then the correction down at the time. So obviously that's no longer relevant because we've gone below the price. So that time ratio doesn't matter at this point. I mean, it mattered that day. It's certainly a nice reaction that day, but overall it wasn't the bottom looking back now. But the next thing I'll point out is the 786 time relationship, and that comes up pretty soon here, November 25th. And then after that, the equality time relationship, where our correction down here in wave 2 would equal the length of time that wave 1 up took. And that comes into play right around the new year, January 5th, 2020. So those are some time relationships just to look for in case price has some sort of large move around those times. But certainly nothing too exciting yet, just something to be aware of. All right, so I will go ahead here and tentatively label that we have our Z for 2 low in place, but certainly not convinced yet. It is possible though. And okay, let's just go here. So on our daily RSI, we're certainly in the oversold territory once again, and not as oversold as we were over here. So we do have a bit of a just bear with me, a bit of a bullish divergence on daily RSI. And that's again where RSI made a higher low, price made a lower low. And we do certainly have a bullish divergence here on the MACD moving averages. Again, a higher low on the moving averages, lower low on price. So it's difficult to imagine getting down here, to around 6,000 or less, even in the mid 5,000s. It seems difficult to envision given that we already have this divergence showing up, given that we are already oversold once again. And there was some pretty good volume here. We've seen higher volume before, but certainly notable volume on today's candle at least. Definitely higher than your average volume, let's say that. But again, I got to see something a little more compelling as far as 5 waves up off the bottom and a nice corrective looking pullback to try and establish another larger sized trading position. So until then, just some patience. Let's see here. If you are going to just go for it here and try and call this the bottom that we have in place today, if you're going to do that, well, if you enter anywhere near current levels, 7,300, you got to put your stop obviously below the lows. So here you'd put your stop probably around 6,800, just below the 6,819 low. That's all right, around $500 worth of risk. If it's a smaller size position, that's not a large risk. If you do get that multi-$1,000 move up without hitting that stop. But for me, like I said, before I size on again here, I want to see something really compelling as far as a pattern setup, and it's just not there yet. All right, definitely some frustration. I feel it myself. That low we had in October sure looked good. Had that nice volume, explosive move off there. Certainly looked impulsive. The decline coming off of that certainly looked corrective. But you can't argue with the price. The price broke the critical level and forced a relabeling here. So again, a triple three complex correction, either complete or at least due for some sort of larger bounce here soon, and possibly setting up for even lower lows after that bounce. But we'll have to determine that once there's more price data to analyze. For now, as far as a fresh entry, I don't see one, but certainly all eyes are on BTC for the next number of days and weeks here. All right, that should be good for now. Serial Trader signing off.